Let's talk about steel companies in particular. Rajesh Ravi, Senior Vice President, Institutional Equities at HDFC Securities Johnson, with his thoughts on this. Rajesh, good morning and thank you so much for taking this call. Now, provisional as it may be, DGTR level it may be, management say as long as it's happened at the Commerce Ministry level, it should be all okay. What is your sense on the impact on the steel companies as a result of this?
Hi, good morning. This was much expected and anticipated, given that the steel prices have been under pressure for last 2.5 years. Some safeguard measures as well as some global triggers were expected for the industry to revive. If you just look back at the consensus numbers for steel companies, we have recently initiated written a thematic report where we have highlighted that FY26, for example, EBITDA downgrade in last 12 months have been for Tata Steel close to 10%, JSW Steel close to 12%. Similarly for JSPL, this was close to 7% downgrade. So all the steel, for FY26 we have seen around 10% downgrade. FY25 earnings downgrade, EBITDA downgrade has been much sharper, close to 30-35%. So this was primarily on account of steel prices drifting lower. Now with steel prices, expected to look up, because if you look at the domestic demand, this continues to remain healthy, and Indian steel producers are largely domestic dependent. Imports per se are lower component in terms of the domestic consumption, but because steel prices, is a commodity price dependent upon what happens globally and primarily in China, they were following the trends because they were getting impacted because of rising surplus from China. Now, two things which have happened recently. First is on the safeguard duties, various governments implementing, and same with Indian government, now imposing 12%. And second, China talking about cutting down on steel production. Now, if of the 110 million ton production exports coming out of China, if that reduces to say 50 million ton, that will itself have a strong bearing on global steel prices, which should recover. And that is where, the street is rejoicing that at least the earning downgrade will for sure get out, and we will see earning upgrades taking shape for next 3 to 4 quarters. So it's a big positive for the industry.
Big positive for the industry, and in fact earnings downgrades turning into earnings upgrades. Rajesh, yeah, right. Rajesh, can you quantify that for us, your early cut on that, and which companies stand to gain the most? We've got a set, but we just want to understand whether our list conforms with yours.
Correct. So, my thoughts are in line with what others have penned, that given that, earnings are EBITDA almost for every 1% realization improvement, your EBITDA changes by almost 5%. For companies with high leverage like Tata Steel and all stands to gain better in terms of valuations. However, JSW and JSPL, we like them more, where even earning EBITDA level, we expect if there is a 2 to 3% revision, upward revision, if we factor in our model, that could lead to close to 10 to 15% upgrades on EBITDA for FY26 for all the entities that we are covering, and that will have positive bearing on valuations for all these companies. So Tata Steel, JSW, JSPL, all these, even SAIL, domestic producer, all of them will see a positive uptick.
Yeah, so Rajesh, just trying to think, right, from a valuation perspective, let's say SAIL very under, I don't know if it's under your coverage or no, but 60% of their products under flat, and people say that, I mean, the estimates are that, let's say 20-30% impact. My question to you is, because the sector will start off higher today, assuming that all stocks start between 3% to 10% higher, from those levels, are you comfortable telling your clients to buy into any of them?
So, see, buying into it is for sure, because even where the valuation currently stands, if I look at the, on EV by EBITDA basis, on yesterday's closing, Tata Steel is trading close to 7.5 times. JSW Steel is trading close to 5 times. JSPL is trading close to 8 times on FY26, and SAIL is around 6.5 times. So valuations, for most of the companies, JSW Steel, close to 9 times EBITDA. So valuations are not at all expensive for most of these companies which are present in a good growth phase. So even at current level, there is obviously good upside given that we are not factoring in the EBITDA upgrades which will happen if these prices were to materialize. So in my sense, all these companies will see both EBITDA upgrade and value upgrades going forward, and hence even at the gap up opening, there are opportunities for all these counters from a long-term perspective, from a 1 year perspective, I would say.
Okay, so Rajesh, interestingly, you'll see a re-rating on steel stocks this morning. What about the consumers of their products, say autos, for example? Where do you think the reverse trade is going to play out today? Rajesh, can you hear me?
Yeah, sorry,
Yeah.
please go ahead.
Yeah. No, my question is that what about auto companies? Do you see a negative impact for them, consumers of these steel products, because prices have already shown the tendency to go up? So what is the reverse play here?
So obviously one man's food is another man's poison,
Yeah.
which goes without saying. So obviously end consumers, because
that's exactly my question. Where is the poison?
so it's always, the steel companies were facing the brand for last 2.5 years. Now, obviously, from the rock bottom, now they are trying to look up. So obviously, this will have some impact for auto consumers, pipe manufacturers, steel pipe manufacturers. So their cost will go up. So it has to be correlated along with the demand numbers. If the demand is good in steel, some of these costs they can safely pass on these cost inflations to end consumers. So it is mix and match of both. Even in steel, because it is more of a global commodity, even if demand is good, you cannot take a price hike when steel prices are low in China or globally. But in autos, if there is any cost inflation, you can obviously take a price hike if there is a good demand.